Welcome to the Inflation Live. Here's why I believe US inflation will ease within the next 6 months. Take a look at this chart, an uptrend inflation. Do you notice the exponential growth from September 2021 to March 2022? By end of year, inflation will have a higher base of 7%, meaning things will actually have to get even more expensive to prolong this uptrend. A simple analogy: last year an apple cost $1, today an apple costs $2, an increase of $1 or 100%. Now imagine next year an apple costs $3, simply a $1 increase but just 50% increment from today. Now, do you see the effect of higher base? Number 2. Rising rates. The US Federal Reserve has started its quantitative tightening program on multiple fronts. For instance, rising interest rates from near 0% to a projected 2.5% by end of year, and from June 2022, reducing their bond purchases from the financial markets. These efforts will drastically reduce the liquidity in the market and keep inflation lower. Fun fact for you, that was exactly how US successfully tackled their hyperinflation back in 1979. Number 3. Economics. Naturally, when demand is above supply, price increase, and inflation becomes the elephant in the room. What we are experiencing right now is double mortgage rates and demand dropping to decades low. Fuel costs and daily miscellaneous expenses should be increasing rapidly. Chances are, majority of the investors out there are losing money in the current financial bear market. From then on, people tend to tighten their spending, reducing demand for goods, and positively, you should know what happened next. Let me know what you think about inflation in the comment section below. Thank you for listening to The Inflation Live.